Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. Thanks for being with us. It's time for a look at developing stories this morning. I'd like to welcome in Kevin Green, senior markets correspondent here on Schwab Network. And let's talk about Rivian. Yesterday, we covered these numbers that came out after the bell. The stock moves to these lows, a huge sell-off, and a big disappointment in production. And no love for Rivian today. Tell us more about this story.
Yeah, Nicole, we are seeing the shares down about 27%, and this is after their earnings announcement came out a little bit mixed, but you're talking about that future guidance when it comes to production, and that was the biggest highlight for the quarter here. They're guiding for 57,000 vehicles for next year. The market was actually looking at 81,700 units to be delivered next year, so that was actually a significant miss, and we're not really seeing areas of opportunity when it comes to this company. Now, they did talk about interest rates and how it's actually impacting the consumer and demand for the most part, and they have had to cut costs for its most popular vehicle, but that's not doing that much when it comes to trying to improve margins for these vehicles here. The revenue came in at $1.32 billion, which was above the estimates, but the adjusted earnings per share actually came in at a negative $1.36 versus the street's estimate of a loss of $1.32. So they're cutting around 10% of their workforce. Once again, the production estimates were not up to the street's expectations. Not a really good report, and we're seeing it being reflected in the stock right now, actually.
Yeah, and and then it just brings back the questions about EV demand. And for example, we're seeing Lucid also down about 19% today. A lot of folks here talking about that. In the meantime, let's take a look at another mover, and this one also to the downside, and that is Etsy earnings report. So thoughts on that?
Yeah, definitely. So Etsy's report, they were actually down about 7% right now after their report. Now, they did actually beat on the top line when it came to revenue, with that coming in at $842.32 million. But the earnings per share did miss the street's expectations. They were met, depending on the analyst that you are following here. That came in at 78 cents. The total merchandise sales actually did reach $4 billion, but they are seeing and they are projecting that gross merchandise sales for the first quarter is going to actually decline in these low single digits or mid single digits, which is not a really good trend. They're adding more sellers than buyers. That's also compressing margins. We talked about that yesterday, and that's why we are seeing the stock once again down here in this session. So they're going to implement some AI solutions in order to try to improve their sales, but I'm not sure if that's going to be enough, Nicole. The consumer discretionary items on their platform continue to see declines when it comes to interest here.
All right, Kevin Green, great to see you, senior markets correspondent. Thank you.